Hi, everyone, and thank you for being here today. We hope that you're having a great spring semester as we round the corner on April. Happy final month of classes to all of our students on the call today. Joining us virtually on the UT side of things, we have students, faculty, and staff out of CNS, Education, Cockrell, Dell Medical, College of Fine Arts, and College of Liberal Arts. A few friends zooming in from UT System, and institutions from across the country. We want to start off with a few housekeeping rules. This is a live event. We'll be taking live Q&A throughout the conversation. All attendees will be muted and video turned off throughout the presentation, but the chat is open. So please feel free to put your questions in there, and please let's stay respectful in this space. Our moderator will call on you throughout for those questions. So let's go ahead and kick it off. Welcome. My name is Ashley Jennings, and I serve as the Managing Director of the Texas Innovation Center. We are the new venture and technology commercialization team here at the University of Texas at Austin. We'd love to hear from you, so please connect with us below at the email or find out more about what we do on our website. Our Executive Director, Dr. Van Truscott, is also here today and will be helping out with Q&A. And joining us as our hostess with the mostest, our CPA and financial expert, Miss Hanna Metaferia. Hanna is a certified public accountant with more than 15 years of industry experience. A licensed CPA in the state of Texas, she serves startups, small and medium government contractors, government grant awardees, and professional providers. She has served as a controller with multiple government contractors, grant awardees, and these providers, combining a strong accounting and consulting background with business systems experience. She specializes in providing accounting support, system design, and business process implementation and optimization. So without further ado, Hanna, I will let you take it away.
All right, thank you, Ashley. Well, I would like to start with thanking Ashley and Texas Innovation Center for giving me this opportunity. I'm excited to go over this with everyone, and welcome everyone again. Today we will go over with me Accounting 101 for startups. Okay, so these are some of the topics I would like to go over with you today.
Hanna, do you mind moving your mic closer? There you go. Thank you.
I'm sorry about that. All right, so today, these are some of the topics I would like to go over with all of you today. We'll start with from early steps and then discuss some of the basic accounting tasks and how to read the financial report and the importance of cash flow management. We'll look at some of the software that are helpful for small business or startups. And then at the end, we will go over the government award requirements for both the contracts and grant funds. Before going into the details, the first thing I would like to emphasize is that it is highly important to start your accounting the right way, right from the beginning. It will save you a lot of headaches. And not only that, if you start things the right way right from the beginning, it will help you have a better control of your finance, and it helps you maintain it properly, and that eventually contributes highly to your overall success as a business owner. Here are some of the early steps a business owner would need to do. And then we'll discuss this as it relates to with the accounting. So one of the first thing would be determining a business structure. So as a business owner, when you start a new business, you will need, one of the decisions you will make is determining which business structure you would want. It can be either sole proprietorship, partnership, C Corp, S Corp, or LLC. They all have their different advantage in terms of tax. Most small companies or startups, they prefer to use either S Corp or LLC. They have more advantage for tax purpose, and also gives a liability protection for the business owner. So once you have that business structure selected, that will also determine how you will be booking the equity section on your book. Another important factor is that when you start a business, you will need to have a separate bank account for your business. You shouldn't be mingling your personal account with your business So it's a must to have a separate bank account. You can also have a company credit card that would also help build your credit history for your company. And eventually down the road, if you need a line of credit or a loan from a bank, that would also help build your history for that. And then the next thing would be choosing an accounting software. There are a lot of good software out there that are helpful for a small business or for a startup. So you can choose, depending on the different features they have, you can choose what is best or easier for you. The main thing in choosing that would be one of the main thing is to make sure that the accounting software you're choosing allows you to track costs per project or cost per customers. This is one of the requirements for government awards, contracts, and funds. So you'll need to ensure that the software will help you to track costs per project or cost per customers. And once you have make your choice on the structure and have a separate bank account and you choose your accounting software, then you can start establishing your accounting system for your business. Establishing your accounting system, start with setting up your accounting software, setting up the chart of accounts, and find a right person to help you with your accounting, with recording the accounting, which helps you to be in compliance with GAAP requirement. GAAP is the generally accounting principle, so that your book should be in compliance with GAAP. And another thing is also as if you receive government awards or government contract or grants, then there are a set of requirements that you will need to be in compliance with. So your accounting system should be set up in a way it maintains all those compliance requirements, which we will discuss furthermore. So once you establishing your accounting system involves setting up your accounting cycle, and the accounting cycle includes some tasks. So I have listed on the next one the basic accounting tasks that needs to be completed to have those GAAP and government requirements and prepare an accurate financial statements. So the first thing to start with the accounting task would be to record financial transactions that are coming from your bank transactions or credit card transactions. Different accounting software allows you to import or directly have a bank feed or a sync with your bank or credit card transactions. That will make things much easier. And once your bank and credit card transactions are entered or synced over to your accounting software, then it needs to be coded to the right account, to the right expense account, to the right revenue account, or to the right equity account. And then once all those transactions are entered on a daily or on a weekly basis, you will need to reconcile. It needs to be reconciled with the bank statement or with the credit card statement once a month, depending on the cycle of the statement. Most bank statements run with calendar months. Credit card statements, they usually have different cycle, but you just have to run to that cycle and reconcile it to match with what you have in accounting software. This ensures that you have included all the transactions on the book, and that there's no duplicates on the book, and any checks that are written are cleared on time. So the bank reconciliation or credit card reconciliation is one of the important tasks to do. Another item or another task related with accounting is setting up is the payroll. Even if you have one employee or you are the employee for your company, then you will need to set up a payroll and process it. There are there are payroll softwares and payroll service provider companies that will help you. That makes things much easier. In general, the payroll process includes onboarding employees, managing their HR records, and then managing their employee time cards. They submit their timesheet and you pay them based on their timesheet. If they are hourly employee and if they are fixed salary employee, you pay them based on the offer letter amount. And any other payroll related forms. There are payroll tax return that needs to be completed quarterly and then annually. And then if you have a contractor, then you will need to process 1099 by the end of the year. So all these are part of the payroll process. And then once the payroll is processed, then that payroll entry will need to be recorded onto the accounting software. So you can have the cost of you paid to the employee and contractors on the book. Another
Anna, sorry,
basic.
1 second.
Okay.
Do you mind just moving your mic down just a smidge, just a hair? Thank you. Can you hear me?
Can you all hear me better now?
Just move it down just one hair. So sorry.
Okay. Is that better now?
Perfect. Thank you.
Okay. All right. So another task would be working on invoicing customers. So if you have government contracts or government awards or grants, you will see the details on how you would be billing on your government contract or on your award documents. If you have government funding, the different agencies list out their billing guidance on how you would be paid. They will have different agencies have their own guidelines. So you will have to follow that particular one you have with. And so overall, invoicing customers is important because it brings in the cash to the company. So that would be the important item, one of the important item in accounting tasks. So you will have to manage your account receivable. Account receivable is when you send an invoice to the customer. It's going to be recorded in the account receivable until you get the money. And when you collect the money, the account receivable will be reduced. Another basic accounting task is paying vendors. You would need to pay vendors on time based on the agreement you have. You would want to, so it's important to pay your bills on time and also at the same time manage your cash. So you'll need to manage your AP and you will need to pay it when it's due on time. And also, when you pay the bill, the bill needs to be recorded on your book to the right expense account it belongs to. And then the last item of the basic accounting task that needs to be completed is the month's end close and preparing financial statements. The month's end close is a process or a series of steps that needs to be completed to review the accounts on your books and to make any adjustments to make the book in compliance with accrual basis accounting. Accrual basis accounting is one of the GAAP requirements. It means you need to record expenses or revenue on the months you provide the service. That means, for example, if you pay a salary and if the salary you pay is for the, like if you pay twice a month and if you pay for the 16th to the end of the month on the 7th on the next month by after the month end, like for example, say if you pay March 16th through March 31st on April 7 or on April 15th payroll run, you make the payment in April, but the service or the salary is related to the work done in March. So on accrual basis, you will record the expense in March and book it into accrued wage. So you can match, so you can put the expense in the month it's incurred. And it will be the same thing for the revenue too. You may not receive the cash from your customer in that same month. For the work done in March, you may receive the payment, the invoice payment in April. In that case, to make it a GAAP compliance on an accrual basis, you will record the revenue in March and put it to the AR. And when the money received in April, you will reduce the AR and you'll have the cash. So that is, those are a series of adjustments that would need to be done on the month's end close. It's usually helpful to have an accountant to go over this. Someone who knows more the GAAP compliance and the government compliance will help you have the book accurately on an accrual basis and in compliance. Having these months in close helps you produce a financial statement that's accurate. And the financial statements are the ones that helps you to see where your company is at and to make a better decision. I also want to point out that though you're required to be on accrual basis for the book purpose, you can choose to be on a cash basis for tax purpose. That's what most companies, startups and small business companies do. You are required to be on accrual basis on your tax return when you hit above a certain revenue amount, but for small business and for startups, it's beneficial tax-wise to be on a cash basis because on tax basis, you will be recording only as a revenue, only the cash you received, and as an expense, only the cash you paid out. So it's more beneficial for tax purpose to be on cash basis. So once you have the month's end closed accurately, then you can use the financial statements to better understand where the company is at. So that's why it's important to be for a business owner to be able to read the financial statements and also interpret from the financial statement the financial health of the company. And that will help you to have a better plan for the future and make strategic decision. So let's discuss about the different financial statements. So we can start with the balance sheet. So the balance sheet shows the financial position of the company as of a specific date. It shows the, so it has three sections: the assets, liability, and equity. So the asset shows the what the company value is, and it shows the liability shows the financial obligation, and the equity shows the contributions and distributions and retained earnings. So let's go over the asset a little bit more. So in the assets, it includes cash and any other valuable goods or products that belongs to the company. For example, cash in your company bank account, the computers and any other equipments or furnitures you bought for the company. Account receivable, which is the invoice you send to the customers and you're expecting to receive. And if you make like prepaid insurance, if you make an advance payment for a year, which would be expensed throughout the year, so that would be an asset. The liabilities are the debts that you owe to another party. It could be a loan from a bank, or it could be a vendor bill that you need to pay to a vendor, which is accounts payable, or it could be a salary which you're going to pay on the next payroll run, which would be accrued wage. So all those sums up to the liabilities. And the equity section includes contribution from the owners. It also includes distributions or withdrawals by the owners, and it includes the retained earning. The retained earning is the amount of the revenue that is put back to the business after you take out after you pay out the expense for this year and you pay distribution. Like for example, say you started the business in 2020, you have a revenue and then you paid expenses, and then you paid out distribution, and then the net amount that's left that you want to put back or invest back to the company is the retained earning. So any money that's left from the revenue that you have paid out and distributed, that goes back to the company is the retained earning. So the asset should always equal to the liability plus the equity. Reading your balance sheet helps you to see the how much your company can pay obligations, financial obligations to others. You can compare the numbers on these three sections, and you can also use ratios to interpret and analyze where your financial position is for your company. For example, if you compare assets, the total asset versus the total liability, the larger asset you have compared to the liability, that shows you have more financial freedom, that you have more potential for growth. So you have more assets to invest or use in the operation. So some of the ratios that you can look at would be debt to equity ratio. The debt to equity ratio compares the total liability to the total equity. It's total liability divided by the equity. So the lower this ratio is, it indicates that there's lower financial risk to the investors. So you can have more investors putting in money into your company. Another good ratio to look at reading at your balance sheet would be working capital. The working capital compares the current assets with your current liabilities. So the current asset and current liability is anything that is convertible within a year. So this helps you, comparing the current asset and the current liability, helps you to see how much available capital you have to cover the day-to-day operation. So if you take the ratio of current asset over current liability, anything above 1 means you have the company has more asset that can easily be converted into cash to cover current liabilities or to cover liabilities in a short term. So anything above 1 is what you want to see for your company. So those are some of the ratios that helps you reading your balance sheet. Another important financial statement is income statement. The income statement has a revenue section. It has the cost of goods sold or cost of service section, and then the expense section. The income statement, it shows the, overall, it shows the profits and loss of a company over a given period. So balance sheet is as of a specific date. Income statement shows you the overall profit and loss over a given period, like for example, over a month or quarterly or yearly. So it's always good to look at your financial statements each month. And also then you can, once you look at on a monthly basis, then you can also compare it annually. You can compare this year from the previous year. That would also give you more better comparison, because sometimes some activities fluctuate from month to month. So to do a better comparison between different time frames, it will help you use a quarterly comparison or yearly comparison. But the monthly report helps you to stay on top. And if you need to, anything you need to improve on the next month on the operation side, that's helpful to see your financial statement on a monthly basis. So when you review the income statement, so revenue less the cost of goods sold or cost of service if you're providing service shows you a gross profit. That gross profit is one of the important measurements to see where you are, how you are doing on your business. So usually gross profit above 50% is a good percentage to have. And that shows you the profitability of the operation. So if the accounting on your accounting software, if you record costs per customer or per project, you can also see the gross margin or the gross profit per project. So you can compare which project you are which project you are profitable and which project you're not, and which areas you need to improve. And also another important item to look on the income statement is the bottom line, which is the net income or the net profit. So you would want to make sure you're having net income. It's obvious that usually when when you start your business, you might have a net loss because you are investing a lot on the company. And also, as you grow, when you want to expand, for example, you may hire more people, expecting to get more revenue later on. So as you grow, you might also have some net loss, but the net loss should be with expectation or looking to the future net income is going to bring in. But overall, you would want to see net income for your company. But there are reasons sometimes you would have a net loss, which is for the benefit of expanding or developing your company. So that would also be an important item to look at. Another thing is you can also look at the trends on your expenses, and you can see which expenses are higher as a percentage of the revenue, and that will help you see any costs or any expenses that can be reduced to increase the company's profit, or any areas that you need to invest more to increase the profitability of the company. Another financial statement to look at is the cash flow statement. The cash flow statement shows you overall, it gives you an overall view of how your business or how your company raised and spent money over a certain period of time. So it has 3 sections: operations, investing, and financing. So it will show you cash flow coming in from operations. For startups and small companies, that's where most of the cash flow is outflow or inflow is coming from, is mostly from the operations. And then the investing section shows you the cash coming in or coming out related to outside investments. It could be the investment you put on other outside of your company, or you can get a proceed from disposal of the investment, or it could be the investment you put on acquiring property or equipment. So it will show you where your money is going in and out on the investing side. And the next section is the financing. The financing shows you the cash inflow or outflow coming related with the outside financing. So it can be money you received from bank loan, or money you received from an investor or maybe angel investor, or money you pay out as a dividend to investor, or money you pay out to pay off your loan. So it gives you it gives you an overview of where your company is raising money or fund and where it's spending it. So it is reading your financial statements and interpreting them helps you make a better decision for your business. Another crucial element on your accounting is managing your cash flow, especially for a startup company. Cash flow management is very important. One way to start with your cash flow is to invoice on time. That's the main source of cash inflow for your business. So invoicing on time is the main point on that. And also you need to have an up-to-date and accurate book. So you can see at a glance where your company is. and you can see at a glance how much you owe and how much you have to pay. You have how much working capital you have available to pay, and how much, like on the AP aging, you'll see how much you will need to pay to vendors, or to how much loan amount you need to pay. So having an up-to-date financial is very important to manage your cash flow. And also managing or monitoring your AR receivable is another crucial part on managing cash flow. You need to, sometimes you may need to follow up on your AR, like always check your terms. If, like, for example, if it's net 30, and when that 30 days is over, you'll have to check if you have received your money for the invoice collection, or if not, you would need to do a gentle reminder. Also, so that will help you having the cash flow into your company. Another is that will help you is to forecast the cash flow and inflow. So this is a very important part. I usually do 3 months to a year cash forecast for my clients. So it helps to see, looking at your previous transactions and looking at your budget, you can forecast how your cash inflows and cash outflows for the next 3 months, a month to 3 months, and then you can even do up to a year. So this will help you to, if you get a good opportunity to invest or to grow your company, so to utilize that option. This helps you if you have this forecast on your cash flow. And also it helps you, like, for example, if you forecast for the next 1 month and you see that you'll have more expenses or more outflow versus the inflow you'll be expecting, then you will find a solution. You can ask for a line of credit, or you can utilize investing. You can contribute to the company to cover those expenses, or you can get other loans to cover those expenses. So it's very crucial to see it in advance and to plan in advance what your outflow and inflow would be, so you can make a better decision for your business decisions. So this can be done on a spreadsheet, or it can also be done on some accounting softwares. I have listed out in here some of helpful softwares for a small business. This is not an exhaustive list, but I have tried to put out some of them, which I really liked. Quickbook Online is one of the online software that's good for a startup or for a small business. They have they have different pricing, and if you choose the one that has the Quickbook Plus, that one helps you track cost by project. So that's one thing you would want to have. And also they also have payroll that comes with it. There's also Quickbook Payroll with it, and they also have Quickbook Time or T-Sheet, as that syncs with the accounting software. Any timesheets that sync with the accounting software helps a lot on invoicing, if you're invoicing per hour. Another software that's helpful for small business, especially when it comes to payroll, is Gusto. It has payroll, and it also has HR and benefits management. So the HR and benefits management is also a good thing. So it comes in a bundle, and they have different pricing. So that's also another good software, or if you just want to have Quickbook and then another, just only the HR software, Bamboo HR is also another HR software. Online payments, if you make payments online, it makes the accounting much easier. You still can use write checks, but Quickbook has an online payment. Quickbook Payments, Bill.com is also another good online payment software that helps you make a payment. It syncs with Quickbook. It syncs with a lot of accounting softwares. Vim is also another online payment that syncs with accounting software, easier to manage. Bill.com also has an approval process where you can set different persons as an approval. On Bill.com, you can also has that feature of bill automation where you can scan or send an email of your bills, and it gets then you can easily code it into Bill.com and make the payment in there. So here are some of good softwares that you can look. All right. I can go over to the government awards and requirements.
Hannah, we have one quick question.
Okay. Yeah, I was going to say. Okay.
What will be the reasonable frequency to forecast cash flow? Monthly, weekly, quarterly?
The reasonable will be to start with monthly. That would be the reasonable one, or I would advise to start with a monthly one.
Awesome, thank you.
Sure. Is there any other question before I moved on to the next topic?
Nope.
Or you can ask at the end. Okay. So as when you receive a government award, it could be a contract or a grant. There is a requirement that comes with it. So there is federal grants. All federal grants or awards, in general, there is a set of regulations that you will need to be in compliance, which is called FAR, Federal Acquisition Regulation. And FAR Part 31 talks about or covers the regulation related to the accounting. On top of that, different agencies have their own supplemental regulations. Like, for example, if you have an NIH grant, NIH has its own additional or supplemental grants policy statement. So whichever, when you get a grant or a contract, then you need to check which agency is related with that grant or contract. And then you have to see if that specific agency have supplemental or additional specific regulation in addition to the FAR. So overall, you would want to be to keep the grant or contract you receive, and also down the road to keep on getting additional funding or renew your contract or go to the next phase on your funding, you would want to be in compliance with all these requirements. So that will help you or save you a headache from during audit time. So it is very crucial to know what are those requirements are, and to follow them and apply it in the accounting and also in the operation side. So I will be going over those requirements on the accounting side. So to be an FAR compliant or an adequate accounting system with FAR, one of the requirement is to have a proper segregation of costs, which means your accounting software, should be able to book or categorize or group the costs into direct cost, indirect cost, and unallowable costs. So the direct costs is costs that are directly related to a project or a cost objective or a contract. So like, for example, the direct labor, direct material, or direct subcontractors. So the wage of those employees who works directly on a project will be recorded under direct labor. And the crucial part in here is if an employee works both in direct labor and administrative labor, then then his wage needs to be broken out into the actual hours, worked. For the hours the employee works on a direct project will be part of the direct labor cost. And for the hours that employee worked on administrative work would be part of the administrative cost, which is indirect cost. Indirect costs are costs that benefits multiple projects or common projects. So in other words, if a cost cannot be directly connected to a specific project, then it is an indirect cost. Different agencies have different terms for this grouping or naming the indirect cost. You may hear the term F&A, which is facilities and administrative. That's to explain those indirect costs. Or you may hear the term fringe, overhead, and G&A. Fringe is the employee benefits like employee insurance, payroll tax paid for employees, vacation paid to employees, holiday paid to employees will be under the fringe. And overhead is could be utilities, rent, and then G&A would be administrative, general administrative, hours work, payments paid for legal fees or accounting fees or any other professional service fees, subscriptions, software subscriptions, all those go under G&A. So you might see different terms depending on which agency you're working with or which contract you have. But overall, this either F&A or fringe and F&A or fringe, overhead, and G&A. So there are different, all of them is referring to this indirect cost. So, and then the next one is unallowable cost. The costs that are unallowable are for government grants or contracts or funds. For example, donations or fines or late fees or interest paid on a loan, alcohol, or if you have a Christmas employee party and so on. Those kind of expenses that doesn't necessarily benefit the government are called unallowable costs, and they should be booked in a separate category. So you will not be getting reimbursed for those unallowable costs. So the accounting system should be set up and implemented and maintained in a way that those costs or categories are recorded properly. And one of the ways you can do is by having your chart of accounts set up in a way to record those buckets. So that's one important requirement. Another one is accumulation of direct costs by contract or grant or budget category. So once you have one direct cost bucket, under that direct cost, you should also be able to categorize or group it to the specific project. So if you're working on more than one project, say project A and project B, the costs under the direct cost bucket should be able to be identified into the cost that relates to project A versus the cost that is related to project B. And another requirement is allocation of indirect costs to intermediate and final cost objective. So this is once you have those indirect costs recorded separately on a separate backend, then by the end of the month or by the end of the year, you should be able to allocate those indirect costs into a final objective. One way you can allocate those indirect costs could be based on the direct labor. So based on the direct labor percentage, then you can allocate those. So there's no one specific way, but you just need to maintain a logical way and be consistent with it. Another requirement is to accumulation of costs under the general ledger control, which means all these costs, the direct cost, the indirect cost that we discussed above, they should be recorded on your general ledger, which is your accounting records. And another very important item is the timekeeping system. This is very important for when you have a government contract or a government grants award. You need to record time. Everybody in the business needs to record time by job and activity. Even if you are working on administrative work, that hours should also be included because it will later on be part of indirect cost. So all the hours by all employees needs to be recorded. The government doesn't require to be an online or a software. It can be done on a paper as well, but it's much easier to use a timekeeping system. It makes things easier. But overall, recording timesheet is an important factor. And also, it must be completed by the employee and must be approved by another person. Any change to employee timesheet should be documented. And like the employee himself or herself needs to make the change on the timesheet. And sometimes if the employee is not available, then the supervisor or manager can make that adjustment with an exception, but it should be documented why those changes done. And you shouldn't be deleting timesheet or hours. If there's any correction, then you should use like a negative adjustment. So you can show or document any adjustments to the timesheet that's already closed. Not when before you submit, you can make a change, but once you submit and it's approved, if you want to make any change, those changes need to be documented. So later on, if you get audited, those are the things the auditors will want to see, because the hours is what later in turn recorded on your books as either direct cost and indirect cost, and which you will be billing the government for. So that's a crucial factor. And the timesheet should be able to track the employee for specific projects they work on, because that's how you will be able to, the first requirement which we discussed, that it needs to be recorded into direct cost and indirect cost, and the second requirement which we said under the direct cost, it needs to be identified to the specific project. The way you can have that cost is if you have the right timesheet, if you have the timesheet coded to the right project. So it is crucial for the timesheet to be mapped correctly, and employees need to be aware of what time they are charging to and to which projects they are charging to. They should be aware of that, and there should be also a documentation of the timesheet policy and the procedures, how employees should record time and what projects they should, when they should charge a direct project, when they should charge an indirect project. That should also be documented, and employee needs to be aware of that. Another requirement that is also interrelated is the labor distribution. So when you have the timekeeping system set up accurately, mapped to the right project, and employees are aware what time to charge and what project to charge, then you will be able to produce a labor distribution based on the project that's entered on the timesheet. So, the labor distribution is coming from the hours the employees submit in and the cost you're paying them. This is also the same thing for if you have 1099 contractors. The 1099 contractors should also be tracking the hours they worked on for the projects they worked on. So you should be able to distribute their labor costs per the projects they worked on. Another requirement is that to be able to produce reports, like interim reports, at least on a monthly basis, you should be able to pull a report. So this is helpful to show if you're drawing the grant funds, for example, if you're drawing on a monthly basis, then you should be able to pull a report on a monthly basis to show the cost you incurred so far, and be able to draw a fund out of that based on the cost incurred for that month. So your accounting system should be able to produce reports on an interim report, not only on a year, but at least on a monthly basis. Another interrelated requirement is the exclusion of unallowable costs. Your accounting system should be set up in a way that you're able to identify and exclude unallowable costs. So unallowable costs should not be mingled with direct cost or indirect cost. And so there has to be, so if the auditor comes, they will want to see your plan or your procedure on how you would be excluding unallowable costs from, how will you be able to identify and exclude those costs from being included in the direct cost. One way is to set up the chart of accounts, to have a separate account for those unallowable costs, so you can easily code it to that account and separate it. Another related requirement is to record the cost by contract line item. Some contracts, they have different line items on their, like they might have clean 1, clean 2, clean 3. So they might have different line items that, and if they do, and if you're required, then your system should be able to break out or record the cost at that level. For example, if we take QuickBook Online, you can add under a customer, you can add project, or you can use class. So you can further break out the costs by line items. And the last requirement is this is mostly applicable for manufacturing contractors, but if you have any pre-production cost before you receive your award or your grant or your contract, then your system should be able to segregate those costs you incurred before you start the work and after your production or after your contract is received. So we have discussed all these requirements. So the accounting software you choose by itself is important because you have to be able to know that it can be used to record in a way to meet those requirements. But another main factor is you need to have the knowledge to apply those compliance requirements. So that's why you would need an accountant with a government grant or government contract or accounting experience that will help you to be in compliance with this FAR requirements. So one way of making sure that you're applying this compliances or requirements we discussed is when you choose the accounting software, you start with making sure that the accounting software is able to track costs per project or per customer. And once you have that, then the chart of accounts is different for government grant or contract awardees because you need to break out those direct costs, indirect costs, and unallowable costs. Your chart of accounts should be modified to have those buckets, so you can easily record in those buckets and meet the requirements. So the chart of accounts needs to be modified from the regular chart of account that comes with accounting softwares. And also, when you record the costs or the expenses when the transactions are being recorded, they have to be recorded with applying those segregation requirements. So if, like, for example, you're paying a vendor, or you bought a material that you're using for a specific project, then that means it is a direct material cost and it should be coded to the direct cost. But if you pay for office supplies, it's supporting the overall company wide. So it is a G&A or F&A, or it's an indirect cost. So it should be recorded into that indirect cost bucket. So you need to have someone who will help you record into the right groups. Another important factor we discussed earlier is tracking the labor distribution. Being able to track, like the software, being able to track the cost per project is a good thing. It tracks, it will help you to book or record on those projects, but to be able to break it out, you will have to have a way or a mechanism to do that allocation or distribution. Some accounting software like Deltek, Unit, they are big software, which is a little bit expensive for a startup or small business company, but the software itself does the labor distribution for you. But for a startup or small business, what I help with my client is if they use Quickbook Online, I will do the labor distribution on a spreadsheet that meets the FAR requirements. And so once I have that distribution completed on a spreadsheet, then we can record per the project. So you need to have a mechanism of distributing the labor distribution. And once you have this labor distribution, then you'll be able to have a job cost report, or it can be also called a backlog report, is where you track your funding and the revenue you have for a project and the cost incurred for that project. So that's also a crucial requirements that needs to be managed by someone who can help have more better understanding with the grants and the contract requirements. So these are the main FAR compliance. And like I said, this covers most of the requirement. But in addition, depending on which agency you will be working with, some the agencies have additional regulations or additional requirements. So once you have your grant or contract, you can go to their website and look or review their specific additional guidelines or additional requirements. All right, now it's time for questions.
Paul, do you want to come on and ask your specific question?
Sure. Can you hear me?
Yes.
Yeah, sure. So like my second question is for the software list I mentioned earlier. Any suggestion about like timing to use them? Like should like a startup try to like use all of those like software like accounting, time tracking, HR at like the first day, or like they should like try to consider about include them at a different stage of the startup?
Okay, good question. So when you first start, you need to choose the accounting software from day one, because you would want to start recording your financial transaction from day one, so you can see where you are at. The second important thing you need to have from day one is your time tracking. Your time tracking is also a requirement for when you have a government grant or funds. So that's also a day one requirement. Like as I mentioned, it's not a requirement to use an accounting, timekeeping software. It can also be done in a spreadsheet, like the time tracking on a spreadsheet. So for cash flow reason, if you want to wait a little bit of setting up a timesheet, you can start with a spreadsheet, but it's advisable if you start with a timekeeping software right from the beginning. That will make things much easier. The other thing is, depending on, like for the payroll, it depends on when you're going to have an employee. When you start having an employee, then you should start a payroll service. Usually, small companies, they may not have employee like from day one. They might start with contractors. And if you only have contractors, and for example, if you're using Quickbook, you can pay contractors through Quickbook without having a payroll service provider. So you can start with that, and then when you start having employees, then you can enroll in this payroll service providers or using a payroll software.
Thank you. And my second question is for those like accounting like software like system, choose like should we take into consideration of the location? For example, is it possible like it's based on like Texas or some other states, they might have different rule of tax? So like when we choose those like accounting system or software, should we take that into consideration before we make a choice? Or like those like software, they will like have some options about like the choose like which like state you're gonna have your startup, about the location?
The accounting softwares are made to help from any location. So you can pick your accounting software regardless of where your location is.
Okay.
Your location matters when it comes to setting up a payroll. So when you set up a payroll, you will have payroll taxes, and you need to you have to, depending on which state you have, you'll have to, like if you are in Texas, then you have to apply for Texas unemployment. You need to sign up for Texas unemployment because as an employer, and so that's when you set up a payroll is where it matters which state you are in. And some payroll service providers, they will tell you which states they provide in, which states they submit payroll tax return for you. Most payroll providers covers a lot of states. They cover more than one state, so most of them have a lot of choice to choose from. But that's where it matters, is when you choose the state you are or the location you are matters when you try to choose which payroll service provider you want to use. But most of them cover more than one state, so they can get more, so they can give service to a lot of clients.
Sure, thank you.
Sure.
Are there any other questions? Okie doke. Well, we're going to go ahead and wrap up. Hannah, thank you so much. Extremely informative and I know impactful for our startups in the room. Thank you all for joining. Please feel free to reach out to us at the Texas Innovation Center. If you're a student, grad student, faculty here on campus, we want to help you with all of your entrepreneurship and commercialization needs. So thank you all again. Hannah, thank you again, and have a great week, everyone.
Thank you, everyone.